Namaskar, and thank you for joining us here on the Economic Brief, the program that looks at key stories from the worlds of economy, business, and finance and contextualizes them from local and global perspectives. On the show today, first, 100 days of Modi 3.0 government with massive multiplier investments in infrastructure. The Bangladesh transition government is looking for a $5 billion bailout from multilateral institutions and lenders. The state of the Sri Lankan economy is a key issue in the presidential elections. And the world's greatest ever philanthropist in history, who has given away more than 100 billion US dollars, is none other than India's Jamshedji Tata. So let's begin by first looking at the 100 days of the Modi government in its third term. A lot has happened on the economy already. We can see that the Sensex, has rallied about 8.2%, about 6,200 points and 6,300 points, doing really well. And that's a signal, a buoyant signal in a sense, that the economy is doing well. We can also see that the forex reserves are at fresh high, a record high, in fact, of 689 billion US dollars. So from these points of view, things are looking quite rosy. The government is spending heavily on capex. In fact, the government is keeping them at elevated positions. Projects worth $180 billion is what the Home Minister Amit Shah said, have already been launched in the first 100 days of this government itself. The fiscal consolidation, however, is also on path. One will look and see that, $180 billion is a huge amount of money. Is the fiscal path going out of sync? But fiscal consolidation path seems to be very much in line. And infrastructure push is amongst the top priorities of the government despite that. So that is important, that the government is managing its fiscal consolidation despite these. But the government has also got a social focus. That's also taking away spending from the government. And if we look at this next slide, in fact, we can see that the 5 lakh rupees that is given to Ayushman Bharat beneficiaries is now extended to all senior citizens above the age of 70, irrespective of where they come from, not only from the communities that require it the most, but any senior citizen above the age of 70 is now entitled to Ayushman Bharat insurance. And also, apart from that, a huge amount of money worth about $65 billion is being put out by the government to support its project of building several houses. 30 million houses are going to be built again in urban and rural areas. This is part of the Pradhan Mantri Awas Yojana, a program that is providing pakka houses, proper houses for people in our country. Then there is, of course, the unified pension scheme that has, in a way, it has restored what people were demanding, that the old pension scheme, but it hasn't put any more pressure on the government spending. So that is, there's not much fiscal risk involved with this. The government is able to meet its expenses for the unified pension scheme, which gives people those benefits. So in a nutshell, these are some of the key points. We could go on talking, but it gives you an idea of where the government has been able to concentrate in the first 100 days and set the tone for, let's say, what we call the Amrit Kal, where India is taking its place to become the third largest economy in the world over the next few years. We are joined by Prasenjit Basu, well-known economist, and he's going to help us understand some of these things. Mr. Basu, how would you assess the first 100 days of the Modi government in its third term? Are you as bullish as the stock market?
Absolutely. I think the government is off to a good start. The budget provides the basis for significant fiscal consolidation. If you look at the numbers to date, we have the fiscal numbers, the very strong revenue growth. Both income tax and corporate tax revenue are growing at a spectacular pace, and as a result, I look at the 12-month moving average of the fiscal balance, and the fiscal deficit is now running at about 4.2% of GDP, way below the 4.9% of GDP targeted for this fiscal year. So I think we are going to see a very substantial fiscal improvement this year, and that improvement is occurring despite the fact that infrastructure continues to be built out at a rapid pace. Now, you pointed out, of course, that the UPS is a way of ensuring OPS-style benefits without the flaws of a pay as of a direct benefit scheme. So instead of having the old pension scheme, the exchequer is actually not affected very much. So it's a very good compromise. Now, apart from that, I think there's also substantial progress on, of course, on the infrastructure front. Inflation continues to come down, right. And as a result, I think India is going to be able to cut interest rates quite aggressively starting next month. The RBI is going to be able to do that, and that is why the stock market continues to outperform. Around the world, we've had a slightly difficult time for stock markets. Even yesterday was a difficult day for the U.S. stock market, but you would notice that India still had a good day today, given the fact that the underlying economic fundamentals continue to be very strong.
You did mention the United States. So what kind of impact would the monetary easing by the U.S. Fed have on money flows, and would it impact FDI, FPI investments in India?
Yes, I mean, it will have a positive impact. I think the key thing is that when interest rates were going up in the U.S., there was the danger that there would be capital flowing from the rest of the world to the U.S. That danger is now beginning to recede. The U.S. has started a cycle of rate cuts. They're going to be cutting rates, not just, they've cut 50 basis points. They've assured that they'll do another 50 basis points by the end of this year, and probably as much as 100 basis points next year. So substantial rate cuts, which basically means that the US dollar will be weakening a bit. The US will not be sucking in capital from the rest of the world as much as it was in the last couple of years, and emerging markets will benefit from that. India, of course, wasn't that affected by this period of rising US interest rates, but other emerging markets were heavily impacted. They had a significant amount of net outflow of portfolio capital. India didn't, but going forward, India's sound fundamentals, coupled with the fact that US interest rates are coming down, means that India is going to continue to attract more and more capital.
Mr. Basu, government's focus on capex and also the launch of several infrastructure projects. How do you view, the government's revenue growth to meet this expenditure?
Well, the revenue is growing at a spectacular pace. You're actually seeing personal income tax revenue growing really rapidly. The 12-month moving average of personal income tax revenue is up 39% year on year. Corporate tax revenue is also up around 26% year on year. So you're seeing very strong growth in direct taxes. GST revenue is continuing to grow at about 10 to 11% almost every month, year on year. And so you have the three main drivers of tax revenue doing very well. On top of that, there was a big dividend payout by the RBI. As a result, the government has received more in terms of dividends already this year than was projected in the budget. So there's still dividends to come from other public enterprises. So the likes of Indian Oil, etc.
Yes.
And even Hindustan Zinc, the government is a 26% owner of that. So there are still substantial dividends that will be coming in.
Okay.
So all of that means that the government's revenue position is very sound, and that is what helps finance the infrastructure drive that continues.
Absolutely. We'll move on to our next story. Please stay with us. Mr. Prasenjit Basu, stay with us as we look at Bangladesh's economy, the economic crisis there, it can have several ripple effects on South Asia. Bangladesh is, after all, a major player in regional trade, and its economic instability could disrupt trade routes and supply chains, especially in the garment industry. And migration pressure also could build up, and the investment climate could suffer in that country. The recent churn in Bangladesh had an economic cause and effect. We're going to run that story for a moment. We'll try to get that story put for you in a little bit. But you understand that there is a problem. After all, the economy is not doing too well. They're looking for about $5 billion worth of a bailout, and they have some commitments. The World Bank has talked about $2 billion. I think the U.S. aid has talked about 200 million. So they have about 2.2 billion. Is that sufficient?
Well, first of all, there already is an IMF program in place for Bangladesh. So Bangladesh has had a difficult couple of years, and part of the reason why there was so much political turmoil in Bangladesh is the economy. Inflation is high, the trade deficit has risen significantly, and the disruptions of the last 2 or 3 months are going to have a significantly negative impact on Bangladesh's ability to continue to export garments. So I think to some degree there's an opportunity here for India to try and attract some of that investment. In fact, what is interesting is that the largest business group, the leader of the largest business group, Fazlur Rahman, has been arrested. So there are all these problems. There are significant problems with Bangladesh's economy that will actually make it more difficult. Now, 2.2 billion is probably not going to suffice to stabilize things. I think it's important for Bangladesh to come to a stable arrangement, to find a way to ensure that minorities are protected. There's a stream of reports of Hindus being targeted and being treated like like a suppressed minority.
Right.
So those things need to change. And also, of course, it is a fact that Mahmoud Yunus has the support of the Americans, and so that'll help.
Sure.
But the IMF is never going to be willing to lend money to a country that is economically unstable, which Bangladesh is at the moment.
I think we have our story ready, so let's turn once again. We've talked about Bangladesh's economic crisis and how it can have several ripple effects on South Asia. Bangladesh is a major player, as we said, in regional trade, and its economic instability could disrupt trade routes and supply chains, especially in the garment industry. There could be migration pressure, and that could affect investment climate. And the recent churn in Bangladesh had both an economic cause, and obviously we're talking about the effects. Let's look at this report.
Even before the student protests that had led to the fall of the Sheikh Hasina government, Bangladesh's economy was teetering on the brink of an economic disaster. In 2022, the Hasina government had approached the IMF for a $4.5 billion bailout. Reports suggest the government received support from various multilateral agencies of $5.8 billion between 2019 and 2022. The government had offered stimulus packages and repeatedly claimed its economy had made a dramatic recovery. Bangladesh is currently facing significant financial challenges. Many of its problems are related to high cost of infrastructure projects, a crisis in the banking sector because of bad loans, and wasteful expenditure on the energy sector. The country is also suffering from capital flight. The chief advisor of Bangladesh, Mohammed Yunus, had indicated on taking charge that his government would prioritize economic reform.
We will undertake robust and far-reaching economic reforms to restore macroeconomic stability and sustain growth.
The country is battling floods, an annual monsoon occurrence in eastern parts of South Asia. The country has sought financial assistance, requesting billions in loans to stabilize its economy. Bangladesh has a problem with falling foreign exchange reserves, high inflation, an energy crisis, and overdependence on garment exports. The Economist chief advisor hopes to maintain comparative advantage.
For our part, We won't tolerate any attempt to disrupt the global clothing supply chain in which we are a key player.
Loans come with a cost, and the government would need to implement austerity measures for the international support to become viable. The World Bank has said it could mobilize an additional $2 billion in financing to Bangladesh in this fiscal year to support critical reforms, flood response, better air quality and health. It was youth power that brought about change in Bangladesh. Now they believe in a bright future.
Our country is under construction, kind of, because it's kind of a newborn baby. So I think side by side we should be aware of what's going on in our country.
Earlier, the U.S. Agency for International Development, USAID, had also committed some $202 million in aid to Bangladesh to advance development, empower the youth, strengthen democracy, improve health and expand trade and economic opportunities. India sees the political churn in Bangladesh as an internal matter and continues to maintain stable neighborly relations.
There's a change of government in Bangladesh, and we obviously deal with the government of the day. How we deal with that is through diplomatic channels, not necessarily through reports which may be reported by the press.
The Bangladesh cricket team is in India on a much-anticipated tour for the cricket-loving citizens of both countries. The Economic Brief, DD India.
So, Mr. Basu, would Bangladesh be able to bring about those reforms with Mohammed Yunus in the chair currently?
You know, the external balances are under some pressure. There's been a significant decline in foreign exchange reserves. Inflation is high. So they'll have to go through a period of some austerity while maintaining political stability, sufficient political stability for economic activity to resume on a normal basis. And arresting the leading businessmen in the country and so on is not the ideal way to do that. But nonetheless, that political churn needs to come to some sort of end soon, so that they can get ahead with economic austerity measures to try and reduce inflation and to stabilize the external balances. And of course, the key to stabilizing external balances is to get exports to operate on a more normal basis, and that is not going to be that easy in the midst of the political turmoil and churn. Right. So it's a difficult challenge, no doubt. But as you said, Mohammed Yunus is an economist. He hasn't been a practicing economist for some time, but he understands the issues quite well. Right. He's not a macroeconomist, but he knows the issues a lot better than the typical. I'm sure. I mean, of course he does. And he's a professor of economics. So he has the wherewithal to make progress. But you know, you must remember he's 84 years old. He's a lot older than Joe Biden. So it's not it's a difficult balancing act for him. But the economic challenges are very significant. And I think establishing a friendlier relationship with the neighbor is a key aspect that he is not addressing at all. Unfortunately, that too needs to be addressed.
And India has said that, of course, the relationship is first with the people of Bangladesh, and we've had good relations with the people of Bangladesh and the youth, because it's a young country, much like ours. We heard there the girl talking about how she has hopes for her country. The U.S. aid seems to be suggesting that they want to empower the youth as well as democracy. How do you view this as an outsider or somebody who's analyzing Bangladesh?
Well, you see, USAID has promised $202 million. That's really a small amount in current circumstances. The $2 billion pledged by the World Bank, it's not clear that is new money. Most likely it is existing programs that will continue. So what Bangladesh needs is the continued disbursement of the IMF program. That's one of the keys. And in order to do that, you'll have to meet the conditionalities that the IMF always puts in place for every country. And in Bangladesh's case, currently, it will involve some austerity, some cuts to public spending, which are very difficult to undertake. Now, politically, what Mohammed Yunus has said, unfortunately, when he came in, was the first thing he said is that this is the second liberation of Bangladesh. the question always arises, second liberation from whom and what?
Yes,
This is not, I mean, I think that was very poor language, but it was language that was appealing to the sort of non-Awami League elements of the polity. The Awami League has never got less than 40% of the vote in the country. So, you cannot operate without 40% of the people, including some of the cricketers in the Bangladesh cricket team who are MPs of the Awami League. So it is a difficult balancing act. I think if economic stability is to be restored, the first thing is to stop the political name calling, the political sort of retributions against anybody associated with the old regime, including Fazlur Rahman of Beximco, the largest business group in the country. So not just, I mean, if you look at the list of the top 10 exporters of garments from Bangladesh, at least 4 or 5 work very closely connected to the Awami League.
Okay.
So if you're going to demonize them all, it's very difficult to get too much done with regard to the economy.
So it is a transition government, and I guess it needs to make that transition correctly. Thank you very much.
But we also have Sri Lanka. I mean, I think Sri Lanka's election is 2 days away, and actually this is a country that has defaulted, and it has defaulted on its sovereign obligations. It therefore is a special ward of the IMF and World Bank, and unfortunately, at the moment, a candidate who is basically from the JVP, the Janata Vimukti Peramuna, the leftist communist party of Sri Lanka, is in the lead in the polls. So we have potential trouble in the south as well.
Okay, we'll leave it there. Thank you very much, Mr. Prasenjit Basu. Thank you for being with us here on the Economic Brief. Moving on then to that story on Sri Lanka, pulling the Sri Lankan economy back from the brink, in fact, required incumbent President Ranil Wickremesinghe to take some tough decisions. The austerity measures did make life hard for the average Sri Lankan, but it brought the economy back on track. Now, structural reforms, debt restructuring with India, even China, Japan, and France helped attract financing from the World Bank and the Asian Development Bank. Now, the presidential elections will determine how effective this economic recovery has been. Let's take a look at this report.
Sri Lanka is holding its first presidential poll since its worst financial crisis in history. Unsurprisingly, economic issues are at the forefront as voters decide the country's fate for the next 5 years. Visitors have started returning to the South Asian nation whose economy is heavily dependent on tourism. But with the cost of production rising, the situation remains bleak.
With the economic crisis, we have not picked up anymore because the cost factor has gone 3 times more. And since then, still we have not increased our cost of the product, selling price.
The economic crisis began in 2019 after the country's dollar reserves dipped, leaving it unable to buy essentials including fuel. Inflation hit 70%. Power tariffs rose by 65%, while the currency depreciated by 45%. Tourism came to a halt due to the COVID-19 pandemic in late 2019, taking a severe toll on the economy. But the crisis also had a lot to do with the disastrous policies of then Sri Lankan President Gotabaya Rajapaksa. He forced farmers to shift to organic farming. This not only hit food production, but also took a toll on the country's vital tea exports. Tax cuts introduced by Rajapaksa reduced government's revenue. As the crisis worsened, a nationwide protest led to his resignation in 2022. Coming back to the present time, experts have warned against the economy's overdependence on bailouts by international organizations.
Whatever party comes in, the challenges are still the same. And if they don't deliver on those areas, then there is that cautious optimism might turn into pessimism and worries 3-4 years down the line whether our debt sustainability is really holding and whether we need to relook at that again.
But that's not all. The next president will also have to look at ways to increase forex reserves while keeping people's aspirations in mind. Anu Kaushik for the Economic Brief, DD India.
Well, that's all we have in this edition of the Economic Brief, but we're going to leave you with the story of Jamshedji Tata, the founder of the Tata Group, India's biggest conglomerate. Now, it isn't well known that he was, in fact, the world's greatest philanthropist. He tops the list of the world's philanthropists to date from the 20th century to now, with an estimated donation of $102 billion adjusted for inflation. It's a matter of pride for India. Diptanshu Kashyap fills us in. And thanks very much for watching. Namaskar.
The philanthropic commitment of Jamshedji Tata began in 1892 when he established the Jane Tata Endowment. His early efforts laid the foundation stone for a culture of giving. In 1898, he donated land for a research institute in the southern Indian city of Bengaluru. The Indian Institute of Science, as it's today known, is among the country's premier universities. According to Sotheby's, Tata remains on the top of the biggest philanthropists in the world, having donated over $102 billion adjusted for inflation. He is placed over American tycoons Bill Gates and Warren Buffett. Under the leadership of his descendants, the Tata Group has continued to uphold Jamshedji Tata's philanthropic spirit. Former chairman Ratan Tata has been instrumental in continuing and expanding his group's charitable activities. For over 120 years, Tata Trusts have outlined a philanthropic purpose in promoting social progress and in creating some of India's most extraordinary institutes. These include Mumbai's Tata Institute of Social Sciences, Tata Memorial Hospital, and Tata Institute of Fundamental Research. Jamshedji Tata's legacy, enduring kindness and generosity transcend time. His philanthropic vision was not merely about giving money, but about creating systemic changes in fields that affect common people. Diptanshu Kashyap's report for the Economic Brief for DD India.